Hello everyone, these are the top 5 things that will be steering your markets in the week to come. Starting off with the RBI MPC meet, followed by the developments on the Sino-US trade talks, next comes the PMI prints, the strong global cues, and finally the sturdy FPI inflows. But the question is, will the coming week be as exciting as the one gone by? Stay with me. This is Tanisha Sharma from etmarkets.com. Before we delve deeper, let's have a quick glance as to how the week went by. The PSU shares rallied, the banks made merry, the consumer durables had their day under the sun, and finally the oil stocks were also on a high. But on the downside, auto, IT, healthcare and metal played the spoiler. The Sensex logged over 1% gain and the Nifty topped 11,200. And at least one brokerage said that the Nifty is likely to scale 12,000 by the time the elections get over. So till now, all this looks good. Let's see what will happen in the week ahead. The 6-member Monetary Policy Committee of the RBI will decide its key rates next Thursday in its first bi-monthly policy meet. The market is expecting another rate cut as retail inflation is below the RBI's benchmark of 4%. And talking about the whole drama that's revolving around the Sino-US trade talks, well, we have positive signs coming in from the same. US officials have said China has made proposals in trade talks with the United States on a range of issues that go further than it has before, including on forced technology transfer. An amicable resolution to their trade dispute will be the biggest relief for the markets across the globe. Nikkei Market Manufacturing PMI and Services PMI will be releasing their data on Tuesday and Thursday respectively. The Market Manufacturing PMI index rose to 54.3 in February to touch a 14-month high driven by acceleration in sales, output and employment. In PMI parlance, the print above the 50 means expansion, while a score below denotes contraction. And not to forget, but the domestic market sentiment will also be influenced by the global data that will be coming in from various sources such as China's manufacturing prints, United States unemployment data and Eurozone's inflation numbers. At a time when the world is worrying about the global economic slowdown, these numbers may have a strong impact on the temperament of the markets. And lastly, the FPI inflows. The recent trends have shown that the FPIs have a strong faith in the Indian equities. After investing over 17,000 crore rupees in February, FPIs have invested over twice the amount in March so far. Sustained capital inflow will keep the market higher. And now let us go over to Sanamir Chandani of Economic Times, who will decipher the FNO positions to tell us where the market is possibly headed.
The April derivative series has just begun today after a very strong series that we saw in March. The Nifty is in fact expected to surpass its previous record high of 11,760 and go all the way till 12,000. That would mean a gain of about 4% from here. Now this conviction is coming among market participants because we saw higher than average rollovers at about 68% on expiry day. Banks, which were the biggest contributors to the rally in March, they also saw very long rollovers.